Good morning from Trend Signal for our review of the data and events this week, starting the 25th of November. Last week, quite a turbulent week in some respects. The US dollar and the euro being pushed around by talk of negative interest rates. That will happen on Wednesday when the ECB was rumoured to be considering negative interest rates, which caused the euro to fall quite sharply, the dollar to rally. But by the end of the week, most of this had been discounted and the euro ended up slightly higher on the week. Sterling remains very strong on the crosses as well. Really, whilst we have ended up flat on the week, on that there has been quite a lot going on. And it certainly looks like the peripheral Eurozone countries are not going to get their weaker euro that they so much crave, at least not for the time being. News overnight is dominated by the agreement reached in Geneva. The US and 5 other world powers, who are Britain, France, Russia, China and Germany, have reached this agreement with Iran to ease the sanctions, or some of the sanctions, in exchange for Iran's capping of their or limiting of their nuclear programming, which will hopefully ensure that Iran doesn't rush to develop atomic weapons. This deal is an interim deal which will last for 6 months, which hopefully will allow these international powers to try and negotiate a more permanent deal. There's been a dramatic effect on crude. I say dramatic effect, crude was up $2.30 last week, so we've seen a little bit of a pullback this morning. And we've also seen quite a sharp move in gold. Gold continues its relentless move lower, having fallen, according to my notes here, just over $46 last week, which is what, sort of 3.5% plus, falling further this morning with potential to get to that 1207 level on gold. Okay, let's have a look at the data coming out this week, starting with home sales. The housing market in the US has been under the cosh a little bit since the Fed mentioned possible tapering of QE last May, and mortgage rates in reaction to that have risen quite sharply as bonds sold off, and I think that has put a real drag on the housing market. So we're looking for signs of a bit of a recovery as mortgage rates have fallen back of late. So the first bit of data is this Monday at 3:30 or 3 o'clock, I should say. Got a figure of 2.2%, signalling an increase in pending home sales. We then have tomorrow morning inflation report hearings. That's Mark Carney testifying to the Treasury Committee in the Houses of Parliament. Does have the potential to move the markets. We then have our second reading on the US housing market tomorrow. That's Tuesday the 26th at 1:30. Again, quite an important number. This is more of a leading indicator, plus 0.94 million units expected there. And then in Tuesday afternoon, we have the Conference Board reading on consumer confidence. This has been a little bit under the cosh, again, because of the political turmoil in the US, the talk of tapering QE, and also this pullback in the housing market. So consumers are a little bit sensitive to those issues. So again, like the housing market, it'd be interesting to see how those are reacting. Those numbers on consumer confidence, 72.2%, that will have a big effect on perhaps the retail sales this coming Friday, known as Black Friday, when retailers in the US enter the black for the first time in the year, i.e. they start to make a profit, having paid all their costs over the last 10 and a half months. Anyway, that will all pan out in the data they release next Monday with their sales over the Thanksgiving break. Okay, good. Let's get on to other data then. So Wednesday, we then have the second reading on our third quarter GDP here in the UK. Plus 0.8% was the first reading, better than expected. We are looking for a similar reading, plus 0.8%, as more data is collated. And then on Wednesday, we have core durable goods. Durable goods, pretty important number actually in the US. The core durable goods excludes some of the real big ticket items like aircraft sales, etc. So we look at the core data, plus 0.5%, an improvement on the previous months. And then we have the weekly unemployment claims coming out a day earlier, I should say, obviously with Thursday being a holiday in the US, unchanged from the previous week at 331,000 jobs. As I said, Thursday is a holiday in the United States. We've got Mark Carney from the Bank of England talking at 10:30. That has a potential to move sterling market. Sterling crosses FTSE and gilts. And that's pretty much it for the week. A quietish week on the data front. Equity markets seem to be moving inexorably higher. And I think some of those traders who are attempting to buck this trend, there seems to be not 100% belief that the market is going higher, and I think that's part of the reasons why a lot of fund managers have been squeezed into this market, and seasonally equity markets do well at this time of year, so shorting equity markets is a bit of a dangerous game. Good, thank you very much for listening. We will reconvene again for a review of what's happened on Thursday. A quiet day Thursday though, as I said, it's Thanksgiving Day, so but we'll review what's taken place to then. Thanks very much for listening, and bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.